Hey, everyone. Before we get into today's interview, just wanted to drop a little reminder to stay up to date with all the latest episodes of On the Margin. You can subscribe to the Blockworks Macro YouTube. Just go up there, just click the little subscribe button, or you can click the links at the top of this episode. It'll take you over to Apple, Spotify, whatever your preferred platform is. Just subscribe there. If you could, leave a rating and review. Really appreciate it. All right, on with the show. All right, everyone, welcome back to another weekly roundup edition of On the Margin. Today, I'm joined by my co-host, Mark Yusko, and I'm not giving you an adjective this week, Mark, but I'm just thankful to have you as my co-host this year. That's
wow.
Right.
Okay.
That's how I'm genuinely feeling. Yeah.
I am thankful as well. And I'm in a little new location since we're doing this a day early because of the holidays, but back in the office. And, I'm getting a feeling that maybe the sock reveal is like losing a little of its luster. So I'll do maybe the last one. I don't know if we'll do it next year or not, but I'll do it. And this is the crazy part, because now I got to come way up. So I have the red pants on today, but I do have the, Bitcoin moon and rocket ship, because I was feeling good this morning. And, I got the blood in the streets pants on, not because there's blood in the streets. I mean, things are going straight up, but I retweeted a tweet from Max Kaiser late last night that said, I'm nervous. There's something going on, right? You don't see this kind of collaboration with regulators and companies all around this ETF thing and all these public meetings if they're not planning something. Like, well, yeah, they're going to plan to make, self-custody illegal. But whether she could actually get that achieved, I'm doubtful. Doesn't mean she won't try. But, and I want to say she, she's the mouthpiece. There's a whole bunch of people behind the scenes that don't want this. But anyway, so.
Elizabeth Warren, you're talking about?
Yes, Ms. Warren.
Yeah. Yeah, I don't know. I think that's pretty indicative of how a lot of people, myself included, feel. I think it's, on the one hand, it's been if you've been working in crypto for the last 2 years, it's been absolutely brutal. It's been down only, all of the hallmarks of a bear market that we all know and put up with. But on the other hand, and so it's like it would make sense for things to turn around now. We're getting the ETF.
Well, it's so funny that you say that, Michael. It is so funny that you say that. And this is kind of, year. Well, actually, next week will be the year in review and the forecast, because you'll be in Montana, I'll be in San Francisco, but we'll do one. But it's so funny that you said, because this year, 23, up only, baby. It has been up only. It doesn't feel like up only. It's interesting. It doesn't feel that way. And it's because the down cycle was so brutal. It actually wasn't as brutal from a dollars and cents perspective, but from a just bashing the media, the piling on of the bad people doing bad stuff and Hurricane Sam and all that stuff. But really interesting, you look at any of the digital asset markets this year, they're just beautiful accumulation charts, higher highs, higher lows. There's volatility. And there was that period, and it was almost 5 months, where we were flat. We kind of had the big run in Q1, and then we kind of went flat through the summer. But, since October and Moonvember, it's been crazy. And
yeah.
And yet we haven't even started. See, this is what's so amazing. And, if you were going to give me an adjective, it would be ebullient. I have not been this excited in a long time.
Yeah, that's how I feel too.
And it's funny because I should not be excited. I was just on a call with Dan Moorhead, and we were lamenting the fact that, holy crap, this is the hardest year. And we're old, right? We've been around a long time. We've been friends for 30 years. And this is the hardest environment to fundraise we have ever seen. And look, I am incredibly grateful. We have 2 incredible anchor tenants that are helping us launch our 4th fund. But beyond that, it's hard to get meetings. I take crap from, all sides about, so I get geez, it's been a tough 2 years. It has in doing and building and, building a media company focused on this space. I mean, I know what you and Yano and the rest of the crew have gone through, and, putting out positive energy content in a world of negative energy, that sucks, right? It's hard. So I get that part. But man, I just look at the confluence of things that are happening, and yeah, there could be some negative surprise, and then they fight you, could get really ugly. But the cycle that starts in 2024, you can't stop that. It's coming. January 1st, 2024 is coming. And the next 4 years are going to be a truly parabolic, exponential increase in technology adoption, application development. And you go back and just look at all the precedents. Go back and look at 54 to 58. Go back and look at 68 to 72. Go back and look at 82 to 86. Go back and look at 96 to 2000. Go back and look at 2010 to 14. There's nothing you can do to stop it. I remember when social local mobile came out, Solo Mo, and it was like, social media, we don't need that. That's stupid. Billions and billions and billions of dollars. And
wait, I've got a great one. Sorry, go keep talking. I've got something I'm gonna.
No, but it's just that beginning of the cycle. It's literally just beginning, and that doesn't mean it's up only. It doesn't mean that we won't have a bust in 2028. We will, but from those ashes, where the bad ideas get flushed, we will then generate. I really believe this. I think we're going to generate $15 trillion of value.
Yeah.
I mean, it's awesome.
I'm with you. All right, everyone. We will be back to the program in just a moment. But before we do, I wanted to give you the inside scoop about something that we've been cooking up at Blockworks these last couple of months. So in March of this coming year, in London, Blockworks is going to be gathering 1,200 of the world's largest asset managers. So that's fund managers and allocators, financial institutions, think big banks, payment providers, etc., and professional traders at the largest institutionally focused conference in digital assets, DAS London. Now, it's very rare that you get the likes of JP Morgan, Goldman Sachs, Point72, the large HFTs, the family offices all in one room at the same time. So if you want to know what the big money is doing in digital assets these days, this is the conference for you. To give you an early sneak peek at some of the stuff that we're going to be talking about, one, the intersection of macro and digital assets, and where are we in the market cycle. We're going to be talking about real world assets, so that's stable coins, on-chain treasuries, all of that fun stuff. And we're going to be talking about things from the allocator perspective. So what are the big money managers in crypto doing these days? And because you are such a good listener of On the Margin, I'm giving you an extra code, MARGIN20. So click the link at the bottom of this episode. Again, use code MARGIN20, and I will see you in sunny London town in March. I think this has been an interesting bear market because I think it's sort of been a tale of two bear markets, actually. Yeah. And I think it hasn't actually been even distribution of pain across all the actors in the ecosystem. So, it's one of the things that I've found is I was actually just talking to a big hedge fund manager over in Europe, and he was saying, this is basically what you just said, one of the most brutal fundraising environments ever. And it's because even if you're in Europe, the first place that you go to raise capital is the US. Most sophisticated allocators, deepest pockets, et cetera. And the US institutional money manager segment has been closed for business. And so if you are a fund or someone like that, it's just been really tough for you. The second group that has been really tough for is frankly like more centralized companies. Been a brutal run of it. There are a lot of companies that they were kind of the darlings of last cycle. They might have raised a whole bunch of money and their customer base just dried up and they're really struggling. So if you talk to anyone that's running kind of like a centralized capital markets infrastructure type play, it has been a nightmare. But then there's this other group of people that are building protocols and I'm not kidding. If you ask them, they're like, what bear market? Like, what bear market? Our tokens are going up. Our teams are growing. We're building all this cool stuff there. It is a completely there's a completely bifurcated experience these last 2 years. And I'd also say that like we've drawn this comparison before. If you look at the price charts of 2019, it was the exact same. I mean, it felt desolate, abandoned, etc. Speaking from my perspective, I think one of the difficult things at that time for me was like, I was still asking myself at this point, like maybe this technology doesn't end up really working out, or maybe all this DeFi NFT stuff is a pipe dream and it never ends up working. I never asked myself that even once this cycle, but maybe that's a little
well, okay. I didn't, with one caveat, and I talked about this a year ago. 1 year ago, I had a little mini existential crisis, right? At the end of 22, when, bad guy did bad things, I was like, whoa. Is this enough to kind of put the genie back in the bottle? That as much as I believe in the tech, because it wasn't, FTX was not a crypto problem. It was a bad guy problem. The crypto never failed, and DeFi never failed. I mean, Dan Morehead was really vehement about that. Like, look at the data. DeFi never had a problem. And I did have a little mini existential crisis. And I say, Dara Albright's piece that she wrote on decentralization kind of snapped me back into my senses. And as painful as this year has been, I feel better for it. I feel stronger for it. And it is that which doesn't kill you makes you stronger. But I actually feel like I've been working out every day, even though I don't work out every day. But I really feel like that struggle, and that's true of life, right? If you want to grow, you have to have pain and struggle. And societally, in the last maybe 20 years, we've shifted a little bit to, I'm going to avoid that struggle. I'm going to avoid that pain. I don't want that. I don't want to talk to someone who disagrees with me, so I'll just block them. I don't want to, look at a new idea that challenges my perception of status quo. I don't want to think about someone competing with me and trying to take my business away. So I'm just going to ignore it. And that process, I think, is what makes us better, right, as humans, because we are resilient and we are persistent and we're cognizant of the things around us when we're in that state. And I don't know. I was on a space today with a bunch of, and I mean this in a loving way, a bunch of degens. And I mean, all young people. I'm like the old grandfather. And it was a blast. And I just love what I do. I love hanging out. I did a call yesterday with these two guys who I think they're going to rebuild the lending business that never should have died in the first place. And they're awesome. They're just awesome, young, hungry, smart guys. I won't call them kids. I mean, but I mean, again, I mean that in an affectionate term. And I'm going to work with them, and I want to help them grow. And I want to be that, adult in the room to say, okay, let's you're enthusiastic. Let me be the voice of reason. And I think we're going to build something great. And anyway, it's just all this stuff that's happening. Well, and I get to talk to you every week, so that's good.
I appreciate same here. I think I had this. I'm back in Montana right now with my parents, and I talked to my dad about this stuff a lot. And obviously, I've been yammering about it for 6 years. He's very aware of Blockworks, and he was just I was talking to him about Solana, and he was like, "Can you describe the difference between Solana and Ethereum?" And I was describing how I'd describe the difference be. It's like, man, this stuff is just so complicated. I was like, you know what? People are not going to ever understand this. The vast majority of people are just never going to understand. Just like, by the way, no one understands how the financial plumbing of the system really works. Just like no one could even describe to you.
Michael, describe the difference between CDMA and TDMA. Come on.
Right.
Tell me the difference between CDMA and TDMA, right? In mobile technology. Tell me literally tell me how I'm talking into a metal and glass box in Chapel Hill, North Carolina, and in real time, you are hearing me and seeing me in high definition after that signal gets parsed up into the airwaves, across fiber optic cables, out of another cell tower, into your metal and glass box. Tell me how that works. It doesn't matter. It works.
I couldn't.
And,
yeah.
And look, the people that do know how it works, the engineers, oh my God. Oh my God. Incredible. Absolutely incredible. But we don't have to be that. What we have to be is pragmatic about when tools come along in the history of mankind, the smart people picked up the tools and utilized them. And the less smart would say, ooh, that looks like a foreign object. That's not something I've ever seen before. I better not touch that. So they fell behind. And those that were willing to embrace new ideas, new concepts, new technologies, that's why, look, we got lots of problems. But
yeah, we do.
Life is pretty damn good. And the fact that I don't have to go hunt for my food tonight, I'm pretty happy about. The fact that, I can transfer value to you without an intermediary today, I'm pretty happy about that. The fact that, I can communicate with anyone, anywhere around the world, that I actually have friends, and I call them friends, even though we've never met, from Twitter. That's unbelievable to me, that I have friends around the world that I can call on and get help just because of a relationship we created through this social network, this fabric. Anyway, but people resisted it. And I get why Ms. Warren and Jamie Dimon and all the other banks don't want you and I to live in a permissionless world. They are very happy being the keeper of the keys, right? They're very happy that it's their money, right? The money I have at Bank of America is not my money any longer. And why do I do that? Because I don't want it in my house, because I don't want someone to come rob my house, so I keep it in the bank. But at some point, an increasing amount of it is going to end up in a peerless, permissionless world. And a little shout out to you guys, and the other guys. Why am I blanking on their name? That you do the permissionless thing with.
Bankless.
Yeah, Bankless. So that event, despite the fact that the numbers were way down, despite the fact that there wasn't the buzz that there has been in the past, that was a turning point for me. I hashtagged it, right? Live permissionless. I inculcated so much of the interactions I had there because all that was left was the builders. And people were talking reality. They weren't talking pie in the sky and get rich quick. They were talking about, this is the long-term vision, this is the long-term plan. And that permissionless theme is what this is all about, right? We want to live in a world where we, the owners of our data, of our identity, of our assets, control those things. And look, a centralized world was awesome for 838 years. I am happy we had a centralized world. I am. And I don't want to blow it up, right? I don't think it has to change overnight. But permissionless is better than permissioned. Decentralized is more fault tolerant than centralized. And Reed was amazing. Web 1, awesome. Awesome. The fact that we can get information ubiquitously everywhere in real time, amazing. Read write, better. The fact that I can contribute content. YouTube, I watch the way my 12, about to be 13-year-old learns. He doesn't go find a textbook. He gets education from an expert Now, maybe the things that I would rather him not be. Actually, no, I'm just kidding around. But visual learning, I mean, there's just 1,000 times more rich content than just words on a page. It's just better. And somebody created that for free. I love that part, right? People put in so much time and energy to make these videos, and then the centralized organization benefits. Well, in the third world, in the Web3 world, that creator is going to benefit, and that creator is going to have a fan base, and that expert is going to get ranked on authority, and that capacity for you and I to engage without having ever met, without ever knowing each other, without knowing everything about you, right? I talk about this all the time. As a dad of a daughter, I don't want the bouncer knowing her home address. I just don't. Didn't think about it at the time. I think about it a lot now. So with my granddaughters, I don't want them to ever hand somebody a credential with their home address on it. That's not necessary. You need my age? Here it is. In fact, you don't even need to see the card, right? Wirelessly, I can verify with a zero-knowledge proof. I am who I am, and that I am this old. You don't even have to know how old I am. I'm just old enough for whatever you want me to be.
Yeah. What's going on, everybody? Thank you for listening to On the Margin. I just wanted to take a quick moment to let you know about a very special offer that we have coming out of Blockworks Research. Now, many of you will probably be familiar with our platform, but Blockworks Research is the most blue chip spot to get research, data, governance, models, and a whole lot more about the leading DeFi protocols in the space. I've leaned on our analysts time and time again to explain complicated concepts going on in DeFi to me like I'm 5 years old. They can do the same for you. If you invest in DeFi or are just interested in it, it is an absolute no-brainer. As a listener of On the Margin, and to say thank you all for listening to the show, you can use Margin 10 for a 10% discount, and that gives you access to everything, which would be weekly in-depth reports, live data, all of that good stuff. So again, that's code Margin 10 for a 10% discount. Link is in the show notes. Sign up now. Thank you later.
Mark, I completely agree with all of that, of course. I want to start with the macro action, then maybe we can drill a little deeper into some of this.
Yeah, we should talk macro.
But,
It is a macro.
We should talk macro.
It's roundup. So we should probably talk about that rather than just riff on the future.
All right, let me show you a chart here because we're ending this year, so we're recording this on December 21st, and the stock market is basically back at all-time highs. So we have the NASDAQ, the Dow Jones, the S&P, all basically trading right about at their all-time high. They just broke out. Now, the entire market over the course of the last probably month or two has shifted very bullish. The Fed has said they're cutting rates, okay, et cetera, et cetera. Now we all think it's going to be a very good next year. What this really reminds me of is if you look at this pattern, let me show you what Bitcoin looked like back in 2021. I mean, it's the same thing.
Yep.
It's a crazy run up, a little dip, double top, and then boom. And I don't know. My framework for a little while has been that Bitcoin and crypto tends to front run liquidity expectations of traditional markets, and I don't know. I'm seeing a pattern that maybe just to play devil's advocate to what I feel like has become a pretty consensus view. There could be a similar type situation. So how are you feeling ending the year going into with all-time highs, in the stock market? Does that feel sustainable, or are we in for a little bit of a surprise?
No, it's not sustainable, but I can't tell you when, the kid's going to come along and say, that guy's naked. I mean, I can't predict when that's going to happen. But look, this year has been massive multiple expansion. There's been a little bit of earnings recovery, but not much. Most of it's multiple expansion and liquidity. I mean, the financial conditions since October got better, and interest rates fell 20%. I mean, a massive move over the last 10 weeks in interest rates. And animal spirits came back. And it is, I like the analogy to that period in digital, because remember, that first move, that first leg up was the $10 billion flowing into GBTC. And Michael sailor talking about how bullish he was. And, supply demand imbalance, not enough sellers, lots of buyers, and boom, 10 to 60. And then Elon famously does I don't know about this. I don't think it's very good. I'm selling mine, and boom. And too much leverage and unwinding. And you had a spiral down 50%. I mean, that was a quick move, 50%. And then people were like, well, nothing's changed. I mean, other than Elon, nothing's changed. And so you had the rest of the FOMO trade, and exacerbated by the Thanksgiving, where everybody's back and things are going up, and they're like, oh, pump, and then November 21st, November 6th, so I guess it wasn't Thanksgiving. I guess it was just the summertime FOMO, but in November 6th, they passed the futures ETF, and it's been straight down, after that. And so I don't think there's that type of catalyst for equities, but if I look at the multiple on NASDAQ and the multiple on the S&P, they're not sustainable. If I look at the fact that all the macroeconomic indicators are heading for the hard deck. I mean, I watched Maverick again twice last weekend. I love that movie. And whenever my wife's gone, I just watch the movie. And because she didn't want to watch it again. But and I watched it for the fight scenes, but flight scenes. But when they're doing that Cobra move, going for the hard deck, it's just crazy. And you look at PMIs, you look at the jolts, the job openings, holy moly. I mean, it's straight down. And so, again, not predicting recession, not saying we're going to fall off a cliff, but those are not expansionary type numbers. And I do think there's a little bit of reckoning. Throw on top of that the normal kind of the third year of the presidential cycle is always the best year, right? There's a 4-year cycle, follows presidential elections. The third year is when the incumbents are trying to stay in power. So they pass a bunch of stuff and do a bunch of stuff and bang on the central bank. And it is not a coincidence that Jerome Powell 2 weeks ago came out and said, yeah, I'm probably cutting next year. That is not a coincidence. That you go back in history, every third year that happens because they say we're gonna be accommodative because we like to get reappointed. And so I look at a couple things. One, the weighting of technology as a percentage of the overall market, we just surpassed the all-time high in 2000. That was unsustainable. This one is too. And big tech, the Magnificent Seven, are at valuation levels that just don't make any sense. And it doesn't mean they can't go higher, but I don't think they will. I mean, personally, I think year 4 presidential cycle is pretty muted year, 3-4%. So, I think that's probably a good estimate for next year. Most people think it's going to be business usual. I always love the estimates are always, it's going to be up 8 to 12%. Like always, that's what they always say. And then, sometimes they're too bullish, sometimes they're too bearish, but they're always saying 8 to 12. The fact that we're up 20 in the third year, that's actually about average for a third year, 16 to 20. So maybe even a little above average. So maybe next year has to be a little below average. So maybe it's closer to flat. That'd be my estimate.
Yeah. It's always very tough to predict. I do think the election year definitely has something to do with it as well. Yeah, I mean, it's just you could really kind of see it going either way. In terms of, on the one hand, the rate cuts, I feel like, is the thing that we've all been waiting for. I'm not a market reader. I was a little bit surprised. I feel like Jerome basically waved the white flag or the red flag or whatever the matador sort of raised for the bull. But it's been pretty muted, honestly, since that FOMC, which is a little bit surprising to me in terms of reaction. We had a pretty sharp sell-off earlier this week. Yeah, I could really just see it going either way. Going into the new year, it's very tough.
Yeah, I mean, so here's the thing. The average, right? The median PE for the S&P, okay, actual PE, not PE on forecasted nonsense, but the actual PE on actual earnings is 14.96. So let's call it 15. And I'm sorry, that's the median. The mean is 16. So the mean is 16. The median is 15. The latest reading is 26. Okay, 26. And if you go back to January, it was 22.8. So, we've increased 3 multiple points in a year where arguably it wasn't that great from a macro perspective to warrant that. And the problem as I see it is we've been above average since 2000. We got to, I think the peak in 2000. Crazy.
I guess
was 20. Oh, no. The peak in 1999 was 33. So again, it can go crazier. So it was 33. Well, actually on because earnings were so sucky in 2002, it actually hit 46. But then we troughed, but our trough was only 14.87 in 2012. That's still barely back to average. Now, if you think about a line, right? If you've been above the line, so if the average is 10 and you've been at 15, 20, 25, 30 for 23 years, at some point you have to go below the line, right? That's just math. Now people say, oh, no, the line is tilted. It's no longer going to be 10 all the time. It's now tilted. Okay, fine. What's it tilted to? 11? 12? It ain't tilted to 24. So the idea that somehow we're magically going to stay super elevated forever is insane. And the part that drives me the craziest is when interest rates were close to zero, you want to give it a 30 PE? Fine. Illogical, but fine. I mean, when I say illogical, meaning zero interest rates tell us that the future is less good than the current. Or else the rates would be higher. And so growth is probably be disappointing. So you should probably have a lower multiple, but fine. If you divide by 0, you get a big number. But when rates went to 5, you can't have a multiple expansion. Now that rates went from 5 to 4, now we can expand them. Whoa, time out. 5 wasn't even in the range of the average for the 10-year. It was 5 to 7 for the last, 100 years. So we're just at the bottom of the range. We weren't even in the range. And you had plenty of time where it was above that. So now everyone's like, well, we're going back to 0. Why? Why would we go down in a world that was so great? So I don't know. But I digress. I think people will be disappointed buying equities at these prices over a meaningful period of time, 3, 5, 8, 10 years.
Yeah. What do you think though? Because the underlying dynamic there, amongst other things, strength in the economy, whatever, is the budget deficits we're running, the fiscal spend. And that to me feels unlikely to change anytime soon, right?
Oh, no, it's going to get worse. It's going to get worse, right? Because the people in power want to stay in power, whichever side of the aisle they're on. They want to stay in. And so they're going to pass crazy amounts of stuff. And look, I don't know if it'll get this bad because, it's funny. When was the last time you heard someone talk about UBI? I haven't heard it in months, maybe even all year. I haven't heard anybody talk about UBI. But right before the election, you'll hear all that stuff come back. UBI, loan forgiveness. I did see I did see there was a proposal from the White House to give grants to 500,000 people to buy homes.
I tweeted that.
Oh, was it you? Oh, it's you.
Yeah, I think it might have been me. I was like, this is.
Yeah, well, I follow you so closely. I can't. It all runs together. I apologize for not giving you credit.
No, that to me though is just absolutely. I mean, I think that's the worrying
Michael, that's
thing.
corruption. That's corruption. That's buying votes. That is buying votes. And it's interesting. I saw this line about corruption. States get cash. Rich people get bailouts. The middle class gets tax cuts, and the poor get handouts, like transfer payments.
Yeah,
all of it's corruption, right? Whether it's the money to the states, right, for highways or whatever, to curry favor with the right governor or whatever, that's corruption. Bailouts, right? Bailing out one bank and not another bank, that's clearly corruption. Tax cuts, you're just buying votes. And if you're going to give somebody free money or tax rebate or, UBI or free electricity, right? What they do in Argentina, they give you free electricity and expect you to, vote for the Peronists. So that's an interesting experiment that's going on down there with Milei and the libertarian guy. Although I'm nervous that he's a statist in libertarian clothing.
I don't really love I don't know anything. I don't follow this closely, but I don't love the politicians that get out there and just say crazy stuff. I don't want to hear crazy stuff. I want to hear stuff that I feel like makes sense. You know what I think this is? I would use a different word from corruption. I would call it populism. And I was listening to this podcast. I've showed this to you a million times. It's the rest is history. There was a really great moment in time back in Victorian England. There was a guy named Roger Tichborne. I don't know if that name means anything to you.
Yep.
Okay. Yep. So he, son of this aristocratic family, ends up going, like many did, to go seek their fortune elsewhere, dies in potentially a ship accident, something like that. Some 20 years later, some guy comes back and claims to be Roger Tichborne. Now, this guy didn't speak the same language. He's 300 pounds. He was obviously not Roger Tichborne, but the family, and there actually is there's a documentary recently about something. I think the name of it is Imposter. It's someone who accepted a lost child years later as someone who's clearly not them. Anyway, the family accepts this guy. This ends up going to court. It becomes, the most watched and sort of, it's like a zeitgeist moment in the pop culture. And ultimately, he ends up, I think he's proven, he ends up getting proven after like 2 years that it's not him because of a tattoo. They had one of his schoolmates come and he didn't have a tattoo that he supposedly had. But it became this populist issue where everyone understood that this guy was not actually Robert Tichborne, but the working class people supported this guy because they felt like they were getting screwed over in the courts. Actually, the person on this podcast compared it to the OJ trial, where, look, this is my opinion or whatever, but many people think that he was guilty, but ultimately the African-American community supported him because it revealed this entrenched racism within the LAPD. And so they were really protesting against the LAPD, less about OJ specifically. The common people sort of rallied to the cause of this guy. And there ended up being a lot of reforms in the, it was kind of a weird populist moment because the middle class people were used to getting screwed over in the courts. And this is what populism is. It comes up in political discourse all the time, for me, within family and friends. And, it's usually people that bemoan Trump and it's like, oh, this and that. It's like, he is the symptom of there is an enormous part of this country that is not being spoken to. And if you just ignore it and pretend that it's a scam or a fad or whatever, you're just missing something. And populism ends up being, unfortunately, the answer to ruling class elites, the government that isn't serving the massive interests of the people. And it usually ends up in a sort of a sad situation. Usually usually it's not great what ultimately ends up happening.
Yep.
But you're seeing it on both sides of the aisle, and I feel like that's the regime that we're in. We're in a populist regime in
I
America.
just realized that we didn't do our London fact to shill Das London in March.
That's true.
And one
this could be kind of like that. Oh yeah, give us one.
One that I have for you is London, and we're going in March, so we're like, oh, I don't want to come. It's rain every day. London is actually less rainy than Paris, Rome, Barcelona, and Miami. So all you people in Miami, come to London, and it's like Seattle. People say Seattle's so rainy. It actually has less rain than Chicago, but now there are a lot of gray days where it rains for 10 minutes and then it's just lousy all day. But it doesn't actually rain a lot. The other one I love is that there is a London stone, which, if theoretically were to be moved, the bedrock of the city would dissolve. So imagine the whole city based on one stone, and we'll have to go see the London stone when we're there.
You know what? That's kind of like the thing in the Death Star. It's like the one airway event.
That's one little air vent, and we blew it. So,
well, I appreciate it. Yeah, actually, I forgot to mention prices are going up. They're going up £200 in January. So if you've been sitting and waiting to buy your ticket, do it now, because you're going to end up paying more if you buy your ticket in 2 weeks. So go use the code margin20. Mark and I hooked you up with a discount. We really should do get there maybe like a day early, do a little hang with some of the folks that listen to the show, bus tour, pub, something like that. That'd be a lot of fun.
Shakespeare's Head, baby. Let's do an event at Shakespeare's Head. It's an amazing pub. And we should definitely do that. I mean, without question, we should do that because, again, back to, Mr. Ebullient here, part of my reason for ebullience, other than, hanging out with you and talking about stuff that I care about, is the community, right? The community of people in this space is like none I've ever seen. It doesn't mean everybody's perfect. That's not my point. But the quality of the people that have migrated to this space, the intellectual capital, the intellectual vigor in terms of not intellect for intellect's sake, but intellectual curiosity and the willingness to pursue new ideas and to build things and to move fast and break things and all those things is awesome. And it's part of what, it's keeping me young, so to speak, even though I don't look young, but I feel young. I say the only time I feel old is when I look at myself. If I don't look at myself, I'm like, in my 30s. And because I hang out with her. I know, I appreciate that. But I really do feel like the people that I'm hanging out with. And it's because that enthusiasm is infectious. And, it's funny, given that I'm just getting over a cold, daycare crud. Having grandbabies is great, except eventually you're going to get a cold. But the virus is spreading again. And, we wrote this piece back in 18, the virus is spreading. I was like, oh, what are you talking about? The virus, that's a negative. So, well, two things. One, all viruses are not negative. There actually are some positive viruses. But what I don't mean the virus, and this is, long before COVID and all that stuff. What we're talking about is virality. And virality is a good thing. And it, again, has to do with, I'm a biology guy. And biological systems grow virally. And that means they grow not linearly, but exponentially. And that exponential growth is why the opportunity set is so vast, but also why it tends to find, it's like water. Water finds its own level, right? It's like if you are excited about something, you tell somebody, it either bounces off them and it's Ms. Warren and you just leave them, or they pick up on your energy and they become part of the network or the community, and it starts to grow. And that's what these events do. these events bring together and people, oh, it's just a bunch of people who already believe it talking to each other. Yeah, but it's talking about new ideas, big ideas. And the thing about this event that's so cool, it ain't just the people that have been getting together every year. There's a whole bunch of new people, a whole bunch of big name institutions, people who you wouldn't expect to see. And that's what's really cool. So despite all the rhetoric coming down that, governments hate this and corporations hate it and institutions hate it, the reality is they're all studying it. They're all dipping a toe in it. The smart ones are already way out ahead of it and embracing it. And that virality and the community building is, I think, what makes change possible, right? Because it feeds on the energy that's created by the participants in the community.
I completely agree. And I agree with you as well. I think, just like anything, I used to think, maybe a little simplistically, like this was all going to become one community. And I don't think that anymore, but I think it's like more of a series of interconnected communities where whenever you're trying to organize really big groups of people, they have their kind of friends and the people that they identify that have a similar worldview as them or are working on similar problems as them. And I think it was sort of simplistic for me to assume years ago that this was all just going to become one homogenous thing.
But this is Reed's law, right? This is, so Sarnoff said anyone that can hear a signal is a node, and therefore a network increases in value by the number of people. So the number of listeners we have is the value of the network. But then Metcalfe came along and said, well, no, because those people are going to talk to each other. So there's more connections. So it's not linear, it's exponential. But then Reed came along, to your point, and said, well, no, in the big network, there are sub-networks. Some of them overlap a little bit. Some of them never overlap. And I always use a simple example of in a group at a reunion, there are tennis players and there are golfers and there are rodeo fans and there are soap opera fans, and they tend to form. They're all connected to the same institution and maybe they interact, but there are these subgroups. And then I said, I've come up with this fourth idea that I named after this friend of mine, Sophia Vechetto, called Vechetto's Law, which says that the pipes are not the same, right? You and I have a great pipe. We know how to communicate to each other. We do it frequently. Other people don't communicate as much. So there's some skinny pipes, there's some fat pipes, there's some active pipes, there's some less active pipes. So that's a fourth dimension of this. And when you get a community that starts over here and one that starts over here, and they're mortal enemies, Ethan Solana, whatever. But then a couple people interconnect because they both like, coming to London and going to Shakespeare's Head and drinking pints. And then they're like, whoa, what do you mean this is the same? And maybe they don't come together, but there's a realization that you're not mortal enemies, that you can, be friends and collaborators and you can stay different, right? You may say, you know what, this ecosystem is different. It's like when I watched the debate between the Cosmos guy and the Solana guy. And, if I were judging, I would have judged the Cosmos guy as the winner. He was great. He was a debater, obviously, in high school or something, but he was amazing. And the Solana guy was very emotional. But the great line, and I don't know if it's true or not, but the great line was, hey, you go ahead and build the best mainframe in the world. Knock yourself out. I'm going to go build the personal computer. And I was like, whoa, okay, that. And maybe that's not exactly how it's playing out, but the sub-chains, right? Anyway, so I do think there's this Reed's Law element of groups within the group. But then there's the communication element that if we have more dialogue and debate in search of truth, instead of you're wrong, I'm right, no, you're wrong, I'm right, we're all better off.
Completely agree with you. I do think actually the way that it's sort of naturally gravitated, at least in crypto, is, it's a really big problem to solve. Actually, there are lots of
there are lots of different like things that you have to do to make a blockchain work, and each ecosystem has focused on solving one particular thing. And actually, it might be better to solve a big problem, to break it up into little chunks and have groups hyper focus on solving this one problem, as opposed to one bigger group trying to solve all the different problems at the same time. I don't know, but it feels like that's actually naturally kind of happened, and steel sharpens steel, and they're all, I mean, even though they feel very competitive with one another, I think they're all
steel definitely sharpens steel. And right, we can all learn from one another, what works, what doesn't work, where the vulnerabilities are. And at the end of the day, we do have a common enemy, right? Which is inertia and the status quo. And so
that's a good point.
The less we fight amongst ourselves and the more we fight against, and I shouldn't call them the enemy, but they kind of are. And I understand why they're fighting. I would fight too. If my livelihood depended on it, I would fight. And we are collectively a threat to many people's livelihood, because the money that we collectively want to liberate, that $7 trillion spent on trust, is someone else's revenue. I get that. But it's no different than any other liberation of wasted effort, time, money, human resources in the past, right? There was a time when we used lots of human indentured servitude to build stuff. That now is a bad plan. It's frowned upon. And, we used to use steam engines to, bore tunnels, and now that's frowned upon. And so technology evolves and people evolve and innovation evolves, but to think that we weren't going to be in a fight, that was a little naive. And I don't know that anyone really thought that. But for a while, they didn't fight us because they were ignoring us. They're like, hey, you guys with your magic internet money, whatever, knock yourself out.
Do you think that the ETF changes that at all? That dynamic?
Yeah. Look, I think it changes it in a lot of ways. One that I'm a little nervous about is it a Trojan horse? Meaning, do those incumbents believe that by approving the boomer wrapper, right, the old school financial services wrapper for this new newfangled technology, that they can somehow control it and make it permissioned? It doesn't work that way, and you and I know it doesn't work that way. But I as smart as I think some of those people are, I think some of them think no, it can work that way. We can get control of this, and we can make it permissioned. So I think that's part of it, and so I do think. But even if they're malintended in the approval, meaning if that's the plan, I'm not saying it is the plan, but if that were the plan, right, to say, oh, we're going to do this to gain control, and then we're going to pass a law to make the rest of what you do illegal, and you're going to have to come through us, and you're going to have to buy JP Morgan coin. Okay, fine. But we in the tech now know it doesn't have to work like that. And yet, once you make that approval, to your earlier point, the very first question, will the other owners of assets say, oh my God, BlackRock's here? Okay, I can stop fighting it, and now I can embrace it. And BlackRock's gonna be like, whoa, no, we didn't tell you to embrace it. We told you just to, let us control it. And they're going to say, I can just go buy Bitcoin myself, or I could go invest in companies that, are doing, payments a better way. And I do think it could be that legitimization, if that's the right word, that people say, okay, let's go find the best idea. And maybe that best idea isn't the old incumbent trying to, put the wolf in sheep's clothing, so to speak.
I remember debates around what's the point of a Bitcoin ETF? The whole point of a Bitcoin is that you can send it. It's liquid. It's easy to send. That an ETF is a wrapper to make it much easier to trade a commodity or stocks or something like that. It's supposed to be an improvement. ETF, the only improvement of an ETF is that it slots into brokerages and is the seal of approval, etc. But
that's all it is. And I actually will agree with those that rail against it, saying we don't need it. That's the whole point, is that we don't want you to put it in the wrapper. We want you to put it on your ledger. But here's the thing. It's not going to happen all at once. I believe there has to be the CeFi step. We're not going directly from all centralized to all decentralized without this, or all TradFi to all DeFi without CeFi. And it's just not going to happen, because there are, especially, with what just happened where Ledger had some losses, and we're investors in Ledger, and I didn't like that happened. And that wasn't like, their PR faux pas on the, restoration with the seed phrase. That really wasn't bad. But the fact that someone got exploited because they were using a DApp or something, okay, that's a problem. I mean, that's a vulnerability. And is it possible that people could make a mistake and forget where they put their seed phrase, or forget where they put their password, or forget where they put their ledger? Oh, you betcha. So bearer assets are fraught with peril.
Yeah.
Right? We all don't have our bearer assets in our homes anymore. In the earliest days of time, you had Saxo money in your house. And in the earliest days, they had little chickens on them or little pigs, and you had traded them with the other guy at the market. But then like, no, someone's going to come to my house and steal them. So I'm going to put them in this institution, and I'm going to get a little piece of paper. Originally I called it flying money because it would fly away if you put it down. And that was a better system. And then we made electronic systems, and that was a better system. And so we've made improvements, and the digital system will be better. But to think that everyone is going to go directly from A to Z, right? Just no. And so
it's never good. It should be there as an option. But I don't even know. I think there's a debate to be had about whether or not it should be the default. It should not be the default in the current state. I will say that. You have a much higher likelihood of losing your seed phrase than you do by the government stealing it or getting caught. Like, we need to, if we want to make self-custody the default, my current standing is this: it should absolutely always exist as an option, as a check and a balance. If we want to make it the default, we have to figure things out like social recovery or whatever, because people will just lose it. You
have to, look, and look, I get it, right? Satoshi said in his early emails, yes, things will get lost or stolen, but consider that a donation to the community, because by shrinking the number, the rest become more valuable. Okay, that sounds very noble and good, and I get it. And I will say, I wish I could give him credit, but I do love dialogue and debate in Search Truth. And so, I was vociferous for a while that I didn't love the original distribution of Bitcoin. I thought it was unfair that only a certain number of people knew about it, and that it just wasn't really available. And they're like, no, that's not true. Anyone could have. I'm like, no, that's not true. It's just not true. And so I kind of leaned more toward this: shouldn't you just do an airdrop to everybody? And then if somebody wants to keep it, great. If they want to get rid of it, they get rid of it. But everyone would then have an equal chance. And people are like, no, that's stupid. That's socialism. I'm like, no, but okay. But I did come around after debating with these guys that the value of converting your time and effort to understand it, to engage in it, and to convert fiat into it is what creates the value. I'm like, yeah, okay, that makes sense to me. And so, but if it's so hard that the average person is forfeiting their fiat to you because you're so sophisticated and you were early, it's not a really good pitch. Yeah. Hey, join my club and give me your money. That's a bad pitch, I think.
Mm-hmm. Yeah, I agree with you. I mean, there's really probably no good way to do it, and it's been done. And I feel like
there's no good way right now because we collectively, the developers believe, and I'm not a developer, I'm not a coder, so I don't know how to solve this. But someone is, I believe, and I hope to back them. So if you're thinking about this, call me. I hope to back them, that someone is going to figure out, like you say, this way to have social recovery. And maybe it's tranching, maybe that's the wrong word, caching, where not everything has to settle immediately to the ultimate chain, and that there's a chance for, I don't know what you call it, like a clearinghouse or a verification step or something that would just allow us to have confidence that, we were doing it right, and that we weren't being exploited. Because that's the other thing. People have gotten phished. People have gotten, people took screenshots of their QR code. And yes, most of that's in the ETH world as opposed to the Bitcoin world, but there's plenty of Bitcoin that's been exploited too. So
agreed.
It'll get fixed.
Agreed. It'll get fixed. I'm with you. All right, Mark, we got to wind down here, but as always, best hour of my week.
Awesome.
All
right, we got one more.
Predictions.
I know. Next week's going to be fun. So enjoy your holiday with the family. Merry Christmas and happy holidays to everyone else who celebrates a different way. I'm going to have a wonderful Christmas with my grandkids and my mom and dad and my brother and his girlfriend and a bunch of other people. And then I get to make the trek out to San Fran to see my son and his daughter. So excited about that. I wish you all the best up in the great state of Montana. And we'll talk to you soon.
You as well, my friend. You as well. Happy holidays to the East Coast and to everyone listening. Cheers, everyone.